is very exciting. So we're signing a executive order today that's going to lead to tremendous growth in the automobile industry. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff.
Under President Donald Trump's newly announced 25% tariff on all imported vehicles and parts, automakers around the world have been forced to rethink their U.S. strategies. The pressure is especially sharp for European luxury brands, and Ferrari didn't wait long to make its move. With production entirely based in Italy and the US accounting for a quarter of its global sales, Ferrari's next step had to be sharp, strategic, and brand conscious. So how did they respond? Well, we will be covering all that in today's video. In a move that caught both domestic and international markets by surprise, President Donald Trump announced a 25% tariff on all imported vehicles into the United States. The proclamation was signed on March 27, 2025, with the tariff scheduled to take effect on April 3rd. The decision immediately disrupted the global auto industry, sending manufacturers, investors, and governments into rapid response mode. Now, you see, the US is a major destination for foreign-made vehicles. In 2024 alone, more than 8 million passenger cars were imported into the country, making it one of the largest car import markets in the world. Until now, imported vehicles were taxed at 2.5%. The sharp increase to 25% is adding significant cost pressure on every non-US made vehicle entering the market. For automakers operating with tight margins and multinational production lines, this wasn't just a regulatory update. It forced immediate pricing decisions, supply chain adjustments, and corporate strategy revisions. The effects were global, but the most immediate consequences were felt in Europe, especially in Italy, where companies like Ferrari, Lamborghini, Maserati, and Alfa Romeo produce their entire lineups domestically. Italy exports tens of thousands of vehicles to the US annually, with luxury brands depending heavily on American buyers. For Ferrari, whose entire production takes place in Maranello, the new tariff applied across their full portfolio. Every car, from limited-run hypercars to GT cruisers, now faced a significant cost increase just to land in the US market. The response from European institutions was swift. The European Commission criticized the policy, warning it could destabilize trade relations and impact thousands of manufacturing jobs across the continent. Italy, already under economic pressure from inflation and stagnant industrial growth, faces added strain. Many suppliers in northern Italy are small or mid-sized businesses that rely heavily on exports to the US for survival. Any decline in orders or shifts in production could put them at risk. So with the industry taking a hit and most brands opting for caution, Ferrari didn't delay to respond with a firm and deliberate move. On March 28, 2025, just one day after the proclamation, Ferrari confirmed that it would increase the prices of most of its models by up to 10%, effective April 2nd. The decision was coordinated with its US dealer network and communicated clearly to customers and stakeholders. The company framed the move as a necessary adjustment to preserve financial performance while protecting the brand's positioning in the market. Not all models will be impacted, though. Ferrari stated that the price hikes would apply only to specific vehicles in its lineup. These include the Purosangue, Ferrari's first ever SUV, the 12 Cilindri, the company's newest V12 Grand Tourer, and the ultra-exclusive F80 hypercar. These models will see a pricing adjustment that reflects the increased cost of bringing them into the US under the new tariff regime. For example, the Purosangue, which retails for around $430,000, is expected to see a price increase of approximately $43,000. The F80, with a base price close to $3.5 million, could see an increase exceeding $350,000 for US buyers. Ferrari made it clear that this price strategy is selective and targeted. The company has deliberately exempted 3 of its key models from any pricing adjustments: the SF90, the Roma, and the 296. These vehicles, which represent a significant share of Ferrari's US sales volume, will retain their existing prices regardless of when they are delivered or imported. This decision is seen as a move to maintain stability and goodwill with longtime clients and repeat buyers. Ferrari also emphasized that this group of customers remains central to its brand strategy and should not bear the immediate cost burden of a policy change over which they had no control. This approach allowed Ferrari to present a response that appeared rational and structured rather than reactionary. The bigger question now is how these changes will impact the actual buyers, the ones walking into showrooms and deciding whether prestige is still worth the price. As stated by Ferrari, a large portion of Ferrari buyers in America are repeat clients, many of whom own multiple Ferraris and treat the brand more as an asset class than a personal vehicle. In that context, the added cost from tariffs is rarely a deal breaker. Many of these buyers pay in full upfront and are less sensitive to price changes, especially for limited production or collector-grade models. According to Ferrari's own data, 25% of global sales in 2024 were in the US, where Ferrari delivered 3,452 vehicles. That market segment is made up of high-net-worth individuals who typically place orders well in advance and prioritize exclusivity over cost. Industry analysts echo this view. A recent note from Bernstein stated that Ferrari's customer base is uniquely resilient to economic shocks and price fluctuations. The analysis suggests that these buyers are not only willing to absorb the increase, but may even view it as a premium attached to exclusivity. In some cases, higher prices can enhance the brand's appeal, reinforcing its status as a symbol of wealth and rarity. Another factor is the structure of the luxury car market itself. Ferrari's production is limited by design. In 2024, the company produced just over 13,700 vehicles globally. That level of scarcity means demand often exceeds supply, which insulates the brand from most short-term disruptions. A $40,000 increase on a $400,000 car may slow interest in other segments of the auto market, but Ferrari operates in a space where value is often defined more by brand, rarity, and perception than by sticker price. But while buyers may not blink at the new prices, Ferrari still faces a challenge behind the scenes. Profitability targets and investor expectations don't automatically adjust themselves. So how does Ferrari plan to absorb this impact while still keeping shareholders satisfied? Ferrari's leadership knew the stakes immediately after the US tariff decision. CEO Benedetto Vigna moved quickly to address concerns from both investors and customers. His messaging was clear. Ferrari would protect its brand value and customer trust while staying on course with its financial goals. This required more than just a pricing update. It meant carefully managing cost absorption, dealer strategy, and production allocation without disrupting the company's long-term objectives. The brand has always been built on control, not just of engineering, but of perception. Raising prices across the board might have protected short-term profitability, but it could have chipped away at customer goodwill. Instead, Ferrari opted for a selective price increase on certain models, choosing to absorb part of the tariff cost on others. According to internal estimates, this approach limits potential damage to margins while preserving demand for core models like the SF90 and Roma. This decision reflects a balancing act, maintaining exclusivity without appearing opportunistic. Ferrari knows its customers expect a premium experience, not just a premium product. That includes price transparency, clear communication, and consistency. Vigna emphasized this in the company's public statement, saying Ferrari would remain committed to respecting clients and upholding the values that define the brand. Their approach is designed to reinforce consistency, not chase quarterly gains. The focus remains on controlled growth, stable profitability, and preserving brand integrity in the face of unpredictable policy shifts. But what is Wall Street really saying about Ferrari's move? Let's take a closer look. Ferrari's response to the US import tariffs didn't just reassure its customer base, it also landed well with investors. In the days following the company's pricing announcement, Ferrari's stock rose by 4.6%, outperforming much of the European auto sector. That gain came despite the broader tension across global markets triggered by the new 25% tariff imposed by President Trump. Investors saw Ferrari's swift, selective action as a sign of operational confidence and discipline, especially in a high-pressure environment. Elsewhere in the auto sector, the picture was less optimistic. Companies with larger volumes and narrower margins saw immediate sell-offs. On March 28th, the Eurostoxx 600 automobiles and parts index fell 2.4%, with shares of Porsche, BMW, and Stellantis all in decline. Stellantis, with significant exposure to both US and European markets, dropped 4.3%, hitting its lowest level since late 2022. German manufacturers also took a hit, as investors anticipated possible retaliatory measures from the European Union and a drop in export competitiveness. The EU's response was quick. European Commission President Ursula von der Leyen issued a formal statement condemning the tariffs, calling them damaging to transatlantic trade stability. She also confirmed that the EU would be reviewing its trade defense tools and hinted at possible countermeasures if the situation escalates. Trade tensions between the US and the EU had cooled in recent years, but this move revived fears of a broader trade war. Several member member states expressed concern about the impact on employment, particularly in automotive manufacturing hubs like Germany and northern Italy. Markets will continue to react as the full implications of the tariffs play out. For now, Ferrari is one of the few companies in the sector with positive momentum, but investors are watching closely for any new developments from Washington or Brussels. Anyway, what do you think about Ferrari's bold response to the new tariffs? Smart move or risky business? Let us know in the comments below. And if you enjoyed this video, give it a thumbs up and don't forget to subscribe for more amazing videos like this one.